Okay, so it is time for us to get into lab. Thank you all very much. Tonight's lab exercise we're going to focus on involves revenues. It's going to look a lot like expenditures. So what you're going to find, and once we get into forecasting, which will be the third part in a couple of weeks, it will make a little more sense, but we're going to focus on revenues, and we're kind of going to approach it the same way we had already focused on expenditures. So I'm going to bring up the spreadsheet. Does everybody see the spreadsheet? Okay, good. All right. So what I want to do is just kind of go over it. This is pulled from I've made some modifications, but it's pulled from the general ledger of our finance system at the city. And this would be, it is based on fiscal year 22, but you'll see some of the numbers are a little off, and I will adjust that when I send out the final assignment tomorrow. Like with expenditures, there are categories of revenues that I would like for y'all to know about, because typically when revenue work is done, there are different types of revenues. The first category would be ad valorem taxes, which again are property taxes, the primary means by which local governments raise funds. You can see here we have these different rate codes, and you have here ad valorem taxes. What we do is we actually try to collect taxes based on a given, we try to appropriately account for taxes. We keep the year in which the tax is due recorded. So what happens is, like, for example, the current tax year is year 2020 for this example. And as you can see, we've put in a budget of 24,700,000. Remember, when we deal with revenues, that in most accounting systems, it's a negative number. So a negative number still means a positive with respect to revenue. So that was something we did in our first exercise. You have ad valorem taxes. This would be the current year. The full adopted is here. Then of course it's not amended, so it's the same level. And this is how much has been collected year to date. And then of course the main fields you'll be working with are the projected and the proposed. Then down here, for budgeting purposes, we budget the money that we anticipate to collect from prior year assessments. As you can imagine, you don't collect all of the money that you're due each year when it comes to collecting revenues, and particularly taxes. You may over collect, but in most cases, when it comes to property tax, you under collect. It's actually something known as the collection rate. There's an overall assessment that's done, and then by law, you're allowed to, based on the assessment and based on the tax value of that assessment, you're then allowed to budget what you actually believe you're going to collect. For most jurisdictions, that's anywhere between 95 to 98% of the total taxable value, total tax value of the properties that they have available for taxation. So what that means, though, even though you're only allowed to budget that in the current year, you can still budget money in the current year for all these back taxes that are in all these columns here, rows, sorry. I do that way too often. Rows 1 through 11, which are prior years. So all this information is prior years. So the easiest way for working with revenues to note that is to sum up the prior years. And so that's a very easy thing to do. You would just go, like, if you wanted to sum it up for FY19, you equal sum, parentheses, and then you select your field, and we're collecting (2019). We're collecting up to 2016. I'm sorry, it's rows 1 through 10, not 1 through 11. You do that, and it gives you the total, $288,977. I can then copy and paste this calculation over to the next cell. So I hit Control C to copy, move my cursor over one, hit Control V, and that pasted in there. Then when I come to fiscal year 21 actual, I'm going to reset the calculation, because as you can see, and I apologize for this, I deleted some rows that I shouldn't have deleted. You can see here, this cell here is actually the current year. That was 19 was the current year in fiscal year 20. So that's why that number shows up so large in fiscal year 20. So we'll move that down to the current year taxes here in a second. Actually, what I'm going to do for the sake of the exercise is I'm not going to require this, because I realize this is incredibly confusing and really doesn't add anything to your study of this. So let me just make some quick adjustments. And then I'm going to So let's go back up to property taxes in the current year. You've got the data for the past 3 years. You have your adopted and your amended. Then you have prior year collections. Special district, a lot of jurisdictions will have a special district that assesses a separate tax rate for a particular purpose. We have one for our downtown. So they actually assess a separate rate, and that's shown here. Then we have the vehicle taxes, which I've talked about. There is also an animal tax. This is a flat tax on domestic animals that's collected, so for pets. Then there's also the tax penalty. So if you pay your taxes late, there's a penalty assessed by statute. The payment in lieu of tax is a very interesting tax. So a jurisdiction may own utility enterprises. If they were private utilities, you would be collecting property tax on them, but because they're owned by the jurisdiction, they are actually not normally taxable. However, because you own them, you can actually assess a tax from the utilities to pay its equivalent value. So this is actually calculated based on the asset value of the utilities, and that's the amount that's paid. Then you have, that can be treated either as a ad valorem tax or as an intergovernmental, because intergovernmental revenues reflect revenues that are collected between levels of government. So you could either treat it as ad valorem or you could treat it as intergovernmental. The rest of these are intergovernmental, and the reason they're intergovernmental is that most of these revenues, while they may be collected locally or while they may be locally received or locally distributed, they are actually made possible through state legislation. So because they are state, the legal requirements are state enforced, they become intergovernmental revenues. So and that's how consumption or sales taxation works in North Carolina, is it works through state law. So you have a couple of different ones here. You have the franchise tax, which is charged on cable TV services. That one's not. You have a tax on rental vehicles, on vehicle rentals. Then you have these two types of local option sales tax. This is the local share of local option sales tax. And the reason why you see two different ones is that 60% of Rocky Mount is in Nash County and 40% of Rocky Mount's in Edgecombe County. So we're eligible to receive sales tax through both counties, and it's distributed separately. There is also a local option sales tax on phone service and telecommunications. There is a statewide tax on solid waste. There is revenue that's collected from wine and beer sales. There is revenue that the local government share in that's generated by the ABC stores. The franchise tax, it's not necessarily called the franchise tax anymore. It's actually a sales tax on electricity. And so that's another type of tax that's out there and is available for people. But it's actually charged on electricity. But it's a separate, it used to be called franchise tax. It's technically now the electricity sales tax, but it is also a source of revenue. Then there may be other fees. For example, Rocky Mount owns and operates a judicial center for a special judicial district of North Carolina. And so we are reimbursed by the state for a share of those costs. We provide court space in this judicial center for both courts in Nash County and Edgecombe County. So we actually receive revenue again from those. KAB is a state program that the city facilitates through the Keep America Beautiful program. There's a whole host of other revenues here that are under intergovernmental. The next category we have going down to row 29 are licenses and permits. And the one that I want to focus on here is one of the few local revenues that we have that we actually collect and that we actually have some control over, and that is the motor vehicle license fee. We actually assess an annual fee on every motor vehicle, and that's $25. That's $25 a year. You also then have sales and services. This is for, again, user fees, which we'll talk about next week. You can see here we charge for parking. There are also maybe some other revenues we collect, like there's one called expense recovery. This is where we are actually reimbursed for expenses that we incur as a jurisdiction. And this may be through a memorandum of understanding or a memorandum of agreement. The next category I want to talk about are interest earnings. Jurisdictions, of course, have money and they invest it. And we talked about, when we were talking about this earlier, that governments don't really put their money or make sure that their money is in very solid and secure investments, but there is interest that's accrued, and that interest is treated as revenue. So that interest is shown in here as a revenue. Then you have your various miscellaneous, which can include building rents that we would charge for use of various facilities or property that we own that perhaps we rent out to a nonprofit. We have a couple of cases of that. We actually also have some commercial real estate. Here in Rocky Mount, we have an old train station that we renovated about 20 years ago, and we use it. We have some commercial businesses that are based in there. Coming down to the bottom, talk about transfers in. So this applies to what are known as interfund transfers. And this happens a lot, especially when you have utility enterprise funds in your government. This is where you would move money from the utilities into the general fund. And the justification for that, and you're limited as to how much you can do, but the justification is that there is the idea that the utility should contribute some to the general government in a general way, not in a specific way to a particular purpose or function, but provide some support for the government of the city. You then have debt proceeds, which is revenue that's collected, that's generated through financing for equipment or facilities. We use something known as installment lease, but other places use bonds or other means of credit. And then last but not least, you have what's known as fund balance appropriated, which is where you actually budget the allocation of fund balance as a revenue. So these are the different categories of revenues that you have. Brantley asked, who determines and manages the investments? That's done typically by the finance director. And what most jurisdictions, including us, do is we actually use a statewide network that handles the management of that, and it's administered through the treasurer's office. So there's a lot of information here, and what I'm going to have you do is going to be some examples very similar to what you did with the expenditures. So for example, when it comes to revenues, like this note here for ad valorem, the projected should be 101% of adopted. In other words, we're going to collect 1% more than what we originally adopted. So again, simple equation in this cell, L2 equals I2 times a 1% increase, which is 1.01, get you that number. And then we're going to increase it additional 2% for 23. So M2 equals L2 times 1.02. And that's the wrong time for that to come up. So it'll give me just a second. Got my charger right here. Sorry about that.
I thought that was my laptop.
No, it was mine. It was mine. I'd forgotten to plug in. So so you can see here that the projected should be 24,947,000 and the proposed should be $25,445,940. So the next example we look at are vehicle taxes. So based on where we are in the year, I can assume that we've collected 60% of what we're supposed to receive so far in this current year. So in this case, for my projected, the formula would be equals K5, which is the year to date. And if that's 60%, I want to see, that means it's 60% of the whole. So I divide it by 0.6. That gives me the amount that I expect to get, which is close to what I budgeted, about $3.15 million. It came out to about 3.157 million. So it was pretty close. Then I'm going to increase that by 2%. So that equals, so M5 equals L5 times 1.02. That equals $3,220,985. I will send out this completed worksheet, this completed spreadsheet to everybody after class. So you will get this tonight to use as an example. So let me look at these. I didn't have time to enter in all the scenarios. So let me do a couple more. Let me look at sales tax. So I'm going to assume for both Nash and Edgecombe that again, we've collected 60% of revenue so far in the current fiscal year, and that we expect a 2.5% increase in 23 due to inflation. So again, take the year to date, divide it by 0.6. It actually comes out a little low. You can see here, if that was what, and these are hypothetical, these aren't exact, but you can see here that that's a reduction from what I budgeted before. And then I go back to here, go to M12 equals L12 times 2% increase, which is 1.025. Gets me 10,537,000. So I lost some revenue there. I overestimated revenues on sales tax. And that can happen because a lot of times there's some lag in sales tax collections. And the other factor we have to keep in mind also is that sales taxes are much more volatile with respect to economic activity. In some cases, particularly if with the broadening of the base with respect to services, they're not as stable. So there is more volatility when it comes to sales tax. I'm going to copy and paste these equations to the next row down because they're the same ones. And that revises my numbers for Edgecombe County as well. Now, sometimes, for example, wine and beer sales, the challenge with wine and beer sales is they typically only come in once a year. So let's say, and typically we don't get advanced guidance on wine and beer sales. So I get revised guidance that says 3% increase or 3% above FY21 for FY22, 3%, 2% increase in FY23. Let me just type in a number here. To use as an example, because that should have been filled in. I'm sorry, it wasn't. So in this example, I don't have a number here, but I'm told it's going to be 3% above FY21. So I go to FY21 actual, multiply it by 3% increase, which is 1.03. That gives me my number for 22. And then I adjust that number, increase it by 2%. That gives me my number for fiscal year 23. Going now to the state court facility, to the franchise tax, collected 50% of revenues to no increase in 23. With this one, there's two ways you can do it. You can either divide by 50% or you can multiply by 2. If you know you gotten 50% of the payments, you know that means it's going to double. So we equal that, divide by 0.5. See a little bit of an increase, and then we just assume that for the next year. That tells us what our revenues are going to be. So this is what you do when you're working with revenues. Let me come down here. Something to keep in mind with lease proceeds is typically you're notified based on how much is actually financed. You may schedule financing, but it may not necessarily happen. But that also means you don't have the expense. So let's say for FY22 actual financing, 4.5 million. And FY23 proposed financing is 5 million. That's just changing the numbers. Now, with fund balance appropriated, you typically don't change this number that much. Now, fund balance appropriated, we talked about as a balancing trick, if y'all remember. And it is a tactic that's used, and there's nothing necessarily wrong with it, because typically when you budget, you hope not to spend all the money that you budget. You hope to actually have some budget left over. Some revenues come in more than projected. So you kind of give yourself some wiggle room. Plus, there may be particular projects that you plan to use fund balance for. But at the same time, you don't want to necessarily become dependent upon fund balance for balancing your budget. So you try to keep that level at a similar level with respect to total budget over time and not necessarily increase it by dollar amount. So for fiscal year 23, I'm just going to equal it to fiscal year 22 adopted, which is I-46. But the other thing that I do is that when you budget fund balance, you don't necessarily show it as a revenue that you receive. So what happens is in your final, in your balance, in your statements, in your financial statements, is that if you actually need fund balance, it's shown as a loss. Even if you plan to use it, even if you have to use it to cover costs, it's still shown as a loss. That's okay because it's intentional. But when it comes to being used as revenue, we don't show it as revenue. So even though it's budgeted as revenue, we don't show it actually being expended. So we zero it out in the projected field. So I'm okay with everything else. So what I'm going to do now is just show you a pivot table again. We've done that before. And I'm going to, it comes to pivot table wizard. It's got all the cells picked. Click OK. New worksheet comes up. And I want the rows to be by category. So I go down, I drag a category down the rows. And then for columns, or for values actually, which will set the columns, I want the FY21 actual, the FY22 adopted, the FY22 amended, the FY22 proposed, I'm sorry, the FY22 projected, and the FY23 proposed. And then to reformat, I highlight all the columns up here, right click, click the comma, and that gives me the information I want. So if this was my budget and I looked at the grand total difference between the proposed for 2023 and my adopted for 2022, would I need to decrease, would I be having to decrease or increase expenditures? In 23?
The decrease?
Yep. Decrease by about $2.5 million. So what your assignment will be when you receive it tomorrow, it'll be a spreadsheet similar to this. There will be processes, there will be instructions here in the notes column. You will need to make adjustments to the projected and proposed fields to columns L and M. Then you'll need to do a pivot table to see where you land with respect to total revenue, to see how it compares. Are there any questions? James asked about previous feedback. I should have that ready by the end of this week. Any other questions? Okay, like, I'm sorry, go ahead.
Sorry, I might have missed this. Is this due next Monday?
No, that'll be extended. It'll probably be due next Thursday because I'm going to do a live lab next week that I will let y'all know what time that'll be at. So it'll be due on Thursday of next week.
Okay, thank you.
All right. Okay, well, thank you all very much for tonight's class. Have a good rest of the week, and I will see you again next Monday for the lab session. Okay,
Thank you.
thank you all.
Thank you.
Good night.
Good night.